Right now, there is a form sitting in a computer at the Internal Revenue Service with your name on it. And the number printed on that form may be money you never earned. Not income, not profit, not a single dollar you ever made. Your daughter paying you back for groceries, a friend covering their half of dinner, someone sending you money for a church collection you organized. The Internal Revenue Service can be told that all of it was business income, in your name, with your Social Security number attached. And here is the part that should stop you cold. If that form arrives and you do nothing, if you look at it, decide it is wrong, and throw it away, a computer at the Internal Revenue Service assumes you hid the money. Verified card, source, IRS Automated Underreporter, AUR, matching program. Not a person, a computer, and it will send you a bill for tax on money that was never yours. Now, I know exactly what some of you are thinking right now. Kevin, I have been hearing about this, the $600 rule. Every app watching every payment. My grandson warned me about it. Now here is the truth, and you are not going to hear this in most places. That $600 rule is dead. It was repealed. Permanently. It never took effect. Verified card. Source. One Big Beautiful Bill Act, Section 70,432, signed July 2025, repealing the $600 1099K threshold retroactively. And that is exactly why I need you to keep watching, because millions of people just exhaled. They heard the scary rule was canceled, and they stopped paying attention entirely. And while everybody was staring at a rule that no longer exists, 4 other things kept running exactly the way they always have. Those 4 are still catching seniors right now, this year, this filing season, and not one of them was canceled by anything. And the timing matters more than most people realize. These forms do not arrive all year long. They arrive in a narrow stretch early in the year, all at once, in millions of mailboxes, which means the window to catch a wrong one and fix it before it hardens into a government problem is short. Weeks, not months. Most people spend those weeks doing exactly the wrong thing. Nothing. Now stay with me, because there is one more thing. For one of these, almost anyone who gets hit can fix it completely with a single request. It works, it is free, and you have every right to make it. And almost nobody makes it because nobody tells them it exists. Before this video ends, I will tell you exactly which one and exactly what that request is. My name is Kevin. I read the rules so you do not have to. If you are new here, this channel exists for one reason. We read the fine print that decides what happens to your money, so you find out before the system decides for you. Subscribe and turn on the bell, because at least one of these is going to land in a mailbox belonging to someone you love. Let me start with the thing everybody got wrong, because you cannot understand the danger until you understand the confusion. A few years back, a law was passed that would have lowered the reporting line on payment apps to $600. $600 in a year. No minimum number of payments. Cross it once, and the app tells the Internal Revenue Service. That number terrified people, and it should have. $600 is nothing. $600 is a few months of somebody paying you back. So the panic spread. Articles, videos, warnings, forwarded emails. Your neighbor told you. Your son told you. And then something happened that almost nobody heard about. It got delayed. Then delayed again. Then, in the summer of last year, Congress repealed it outright, and made the repeal reach backward, as if it had never existed at all. Verified card. Source. One Big Beautiful Bill Act, Section 70,432, retroactive repeal of the lowered threshold. So, what is the actual line today? A payment app has to send that form only when both things are true at once. More than $20,000 in payments for goods and services, and more than 200 separate transactions in the same year. Verified card. Source. IRS. Current federal 1099K reporting threshold for third-party settlement organizations. Both. Not one or the other. Both. And it is worth understanding why that line exists where it does, because it tells you who all of this was ever aimed at. The reporting rules were built to catch real commercial activity, businesses moving serious volume through payment platforms without reporting it. That is what $20,000 and 200 transactions describes, a genuine operation, not a retired man selling a few dressers. The problem was never the target, it was the collateral. When the line was going to drop to $600, it would have swept in millions of people who were never the point of the rule at all. That is why it drew the fight it drew, and that is ultimately why it was struck. Now think about how far apart those two numbers are: $600 and $20,000 plus 200 transactions. The rule that people are still frightened of and the rule that actually exists are not close to each other. They are in different worlds. And I want to explain why the wrong number is still circulating everywhere, because it matters. The frightening version of this rule was announced loudly. It was going to affect nearly everyone, so nearly everyone wrote about it. The repeal was quiet. It arrived buried inside a much larger bill, one section among hundreds, and almost nobody stopped the presses for it. That is how it always goes. The scare travels at full speed, the correction limps. So years later, you can still find articles, videos, even well-meaning advice from people who mean you no harm at all, repeating a number that was struck from the law. And this is not a small thing, because being frightened of the wrong rule makes you careless about the right ones. It is the exact mechanism that lets the real traps keep working. And I want to say the good part plainly, because you deserve to hear it. Money that friends and family send you was never part of this. Not under the old rule, not under the new one. Your daughter sending you money for the water bill, splitting a dinner check, a gift on your birthday, somebody paying you back. Verified card. Source: personal payments between friends and family are excluded from 1099-K reporting. Personal payments are not income. They were never taxable. They are not reported. So if you are sitting there watching this thinking, "Thank God, then none of this touches me," that is precisely the moment I need you to lean in. Because that exhale, that relief, is where the real trouble starts. Here is the first thing that did not go away. A form is not what makes money taxable. Let me say that again, because it is the single most misunderstood sentence in this entire subject. The form does not create the tax. The income creates the tax. Verified card. Source: IRS. Income from goods and services is taxable whether or not a Form 1099-K is issued. An enormous number of people believe the opposite. They believe that if no form arrives, there is nothing to report. That is not how any of this works. It never was. If you sold things, provided a service, ran a small side business, earned money, that money is income, whether a piece of paper shows up in your mailbox or not. Now, I know what that sounds like, so let me draw the line clearly, because the line is not where most people think it is. Selling something you already owned for less than you paid for it is usually not income at all. The old couch, the exercise bike nobody used, a car sold below what it cost. That is not profit. That is you getting rid of something at a loss. But making something and selling it, or providing a service someone pays you for, or buying things specifically to resell at a markup, that is different. That is earning. The word people get wrong is hobby. A great many people believe that if something started as a hobby, the money it brings in cannot be income. That is not the test, and it never was. The question is not whether you enjoy it. The question is whether money came in from selling something or doing something for someone else. You can love every minute of it and still owe tax on what it paid you. Let me tell you about Thurman. Thurman is 71. He lives in Marion, Illinois. He spent 34 years as a welder. When he retired, his hands did not know how to sit still, so he started restoring old furniture in his garage. Dressers, chairs, a rocking horse for a neighbor's grandbaby. It grew, the way these things do. People started asking. He started selling. Money came in through a payment app. Not a fortune, but over a year, several $1,000s of real sales, to real strangers, for real furniture. Thurman heard the $600 rule was canceled, and he understood it exactly the way most people did. No form, no tax. It is a hobby, not a business. He never reported a dollar of it. And here is the trap that closed on him. The buyers who paid him did so through an app. Some of them tagged those payments as being for goods and services because that is what they were. Thurman's own state, it turned out, has a reporting line far lower than the federal one. Verified card. Source: several states apply lower 1099-K thresholds than the federal rule. Confirm your state's threshold. That is the second thing that never went away, and almost nobody knows it. The federal government is not the only one with a line. A number of states set their own reporting thresholds, and some of them sit far below the federal one. So you can be well under the federal number, and still get a form because of where you live. And there is no single national answer to give you, which is exactly what makes it dangerous. The line depends entirely on your state. Two people can do the exact same amount of selling, one in one state and one across the border, and only one of them ever sees a form. So when somebody tells you confidently that you are safe under some big federal number, that person may be right about the federal government and completely wrong about where you actually live. That is why the answer to this is not a number you memorize from a video. It is a number you look up once for your own state and then never worry about again. 10 minutes, one time, and the whole question is settled for good. Thurman got a form. He had believed sincerely that no form was possible, and because he had never reported the income, the form arriving was not the beginning of his problem. It was the moment his problem became visible. Now, I want to be fair here because I promised you honesty. Thurman was not a criminal. He was not hiding anything on purpose. He was a man who heard the rule was canceled and drew the reasonable, wrong conclusion that a canceled form meant canceled taxes. That is not greed. That is a language problem. And the system does not grade on intent. And what it cost him was not 1 year. That is the part that stings. When something is never reported, the clock that normally protects you does not start the way you would expect. A return that was never filed or income that was never shown leaves the door open far longer than most people assume. Verified card. Source. Unreported income can extend the period the IRS has to examine a return. Confirm current rules. So Thurman was not answering for last year. He was answering for a stretch of years, all at once, with interest attached to every one of them. And the interest is the quiet killer in these stories. The tax itself was survivable. It was the years of interest stacked on top of it that turned a manageable number into a frightening one. Every month he did not know was a month the number grew. So let me give you the rule in one sentence you can actually keep. If you earned it, it counts. If somebody gave it to you or paid you back, it does not. That single line separates almost everyone who is fine from almost everyone who is not. And this is exactly why I built the thing I am about to tell you about. Because Thurman did not need a lawyer. He needed one plain sentence in plain English before he ever sold that first dresser. Nobody handed him that. The rules that decide what happens to his money were written in language designed to make him give up halfway through and guess. That is what the Quiet Rules is. It is the drawer version of everything I cover on this channel. Written large, written simple. What counts as income and what does not. What to do the day a form arrives that looks wrong. The exact request that fixes it, and who to send it to. So the person sitting at the kitchen table with a government form in their hand knows what to do that day. Not 18 months later, when a computer has already decided. The paper remembers for you. That is the entire point of paper. You can find it at kevinexplains.shop. The link is right below this video, or scan the QR code on your screen right now. It is also in the pinned comment at the top, and there is a 7-day guarantee, always. If it does not hand you something you did not have before, you send it back. Because the alternative is another honest man in a garage, building something beautiful with his hands, and finding out 2 years later that a sentence he never heard cost him thousands of dollars. If nobody has ever told you that a canceled rule does not cancel a tax, do me one favor. Subscribe and turn on the bell. Because this channel reads the fine print that nobody mails to your house. Now the third thing, and this is the one that catches people who did absolutely nothing wrong at all. One wrong tap. When somebody sends you money through one of these apps, they choose a category. Most people never even look at it. There is a setting for personal payments, friends and family, paying you back. And there is a setting for goods and services, a purchase, a business transaction. Verified card, source. Payment platforms distinguish goods and services payments from personal payments for reporting. Here's the problem. The person sending the money picks, not you. And if they pick wrong, if they tap goods and services when they are simply paying you back for the grandkids' school shoes, that money now counts as a business payment, in your name. Even when it was a mistake, even when everybody involved knows it was a mistake, the platform does not know what the money was. It only knows what button was pressed. And you cannot fix this on your end, which is what makes it so unfair. There is no setting on your side that says, reject anything tagged wrong. The choice belongs entirely to the person sending, and most of them have never once looked at that toggle in their lives. Which means the only real defense is a conversation, and it is an awkward one. If people send you money regularly, church money, family money, money for a group gift, it is worth saying once, plainly, When you send it, choose the personal option, not the business one. It takes 10 seconds to say, it saves a year of explaining, and the people who love you will not mind being asked. They would mind far more knowing a wrong tap of theirs put a government letter in your mailbox. Let me tell you about Ione. Ione is 68. She lives in Muncie, Indiana. She organizes the flowers for her church. Every year, she collects money from other members, buys the arrangements for the whole season, and handles the whole thing herself. It is not a business. She does not make a cent. She spends more than she takes in most years. Last year, church members sent her their shares through an app. Several of them, trying to be careful and official about church money, tagged their payments as goods and services. They thought that sounded more proper, more like a real transaction. Ione received a form showing thousands of dollars of business income, for flowers, that she bought for other people, with their own money, and made nothing on. She looked at that form the way anyone would. She knew it was wrong, obviously wrong, absurdly wrong, so she set it aside and did nothing. And I want to be careful here, because it would be easy to make that sound foolish. It was not foolish. Think about what she was actually looking at. A government form, full of language she did not write, claiming something she knew for a fact was untrue. Her instinct was the instinct of an honest person. This is obviously wrong, therefore it cannot possibly count. That instinct is correct in almost every other part of life. If a store hands you a receipt for something you did not buy, you hand it back and it ends there. If a letter comes addressed to a stranger, you set it aside and nothing happens. But this is the one place where obviously wrong does not resolve itself. Because the copy that matters is not the one in her hand. And that decision, that completely understandable decision, is the fourth thing, and it is the most dangerous of all of them. Because when a form is issued, a copy goes to you, and a copy goes straight to the Internal Revenue Service. Verified card, source. Form 1099-K copies are filed with the IRS by the issuing platform. 2 copies, one for your kitchen table, one for a database. And inside that agency, a system quietly compares what was reported about you against what you reported yourself. Verified card, source, IRS Automated Underreporter, AUR, matching program. It is not a person reviewing your case. It is a matching program. It sees a form saying thousands of dollars. It looks at your return and sees nothing. And it does not conclude that a church member tapped the wrong button. It concludes that income was left off. So a notice goes out, tax owed, interest, possibly a penalty. And I need to give you one warning inside this warning, because it costs people real money every single year. Confusion like this is exactly what scammers feed on. When a subject is frightening and half understood, the calls start. Someone claiming to be from the agency, demanding payment today, threatening arrest, asking for gift cards or a wire. Verified card, source, IRS. The agency does not demand immediate payment by phone or threaten arrest. Understand this clearly. That is not how any of this works, ever. A real matter of this kind begins with a letter, on paper, in the mail, with time to respond and a way to disagree. Nobody legitimate will ever call you demanding a card number before the end of the day. If that call comes, the answer is to hang up. Not to be polite, hang up. Not because you did anything wrong, because a machine found a gap and filled it with the worst explanation. And once that notice exists, the burden has quietly flipped. Before the notice, she was a woman with a wrong piece of paper. After it, she is a person being asked to prove a negative to the federal government. That is a harder job than it sounds. Proving you earned something is easy. Proving you did not earn something requires reconstructing an entire year of ordinary life. Which is exactly why the timing of all this matters so much. The same problem, caught in the first week, is a phone call to a payment app. Caught 18 months later, it is bank statements, a written explanation, and a stretch of sleepless months waiting for a response. Nothing about the underlying facts changed, only the calendar did. Ione got that notice more than a year later, long after the flowers had wilted and the season was forgotten. And by then, she was not correcting a form, she was answering the government. That is a completely different conversation, and a far harder one. Now here's the part I need you to hear, because this is where it turns around. That form was fixable, easily fixable, from the very first day it arrived. When a platform sends you a form showing money that was not business income, you do not have to accept it. You can go back to the company that issued it and ask them to correct it. Verified card. Source: IRS guidance. Request a corrected Form 1099-K from the issuer when the form is incorrect. That is the request I promised you at the start of this video. That is the one. A corrected form. Requested from the issuer. Before you file, if you can manage it. The platforms have a process for this. They know these mistakes happen constantly because the sender picks the category and senders get it wrong every single day, and almost nobody asks. They look at a wrong form, decide it is a government problem, and set it on the counter. The form does not go away. It is already in the database. Silence is not a defense. Silence is the thing that triggers the letter. So let me say it as plainly as I can. A wrong form is not a disaster. A wrong form that was ignored becomes one. And if it is already too late for a correction before filing, there is still a way. There are ways to show that money on a return and then back it out as what it actually was, so the machine sees the number it is looking for and the tax lands where it belongs. Verified card. Source: IRS guidance on reporting a 1099-K received in error. Confirm current year instructions. The point is that you are not stuck. You are only stuck if you do nothing. And that is exactly what the quiet rules holds. Who to contact for a corrected form and what to say. What to do if the form was already filed. How to keep the record that proves what the money actually was. For this, and for every rule in this video, sitting in the drawer, in plain English, before the notice comes, not after. You can find it at kevinexplains.shop. The link is in the description and in the pinned comment at the top. Or scan the QR code on your screen right now. 7-day guarantee, no questions asked. Because the alternative is a woman who arranged flowers for her church at her own expense, explaining herself to the Internal Revenue Service over money that was never hers to begin with. And if you want me to look at your own situation directly, email me. The address is on your screen and in the description below. I read every one. Now the fifth thing, and this one is the quiet foundation under all the others. Mixing. Most people have one account and one app, and everything flows through it. The pension, money from a daughter, a little income from something they sell, reimbursements, gifts, all in the same place, all mixed together. And on the day a question ever comes, there is no line anywhere in that history separating what was income from what was not. Let me tell you about Melba. Melba is 74. She lives outside Sedalia, Missouri. She sells quilts. Not many. A few a year, mostly to people who ask after seeing one at a church sale. And through that same account flows everything else in her life. Her son sending money for her car repair, her sister repaying a loan from years ago, a refund, birthday money for her grandchildren that she passes along. When a form arrived showing a large number, Melba's actual quilt income was a small fraction of it. She knew that. She could have told you exactly which sale was which. But knowing is not the same as showing, and what she had to do was show it. Line by line, in a stack of statements, months after the fact. Now let me tell you about Grover, because he is the other side of it. Grover is 76. He lives in Chickasha, Oklahoma. He sells woodworking, about the same volume Melba sells quilts. The difference is that Grover keeps his selling money in one account, and everything else in another. That is the whole difference. Nothing clever. When Grover's form arrived, it matched his own records almost exactly, because his selling account only ever held selling money. No untangling, no stack of statements, no proving. Same kind of work, same kind of form. One of them lost weeks of her life. The other looked at a piece of paper, nodded, and put it in a folder. That is not a trick, it is not a loophole, it is a decision about where money lands, made before anybody ever asks a question. And it costs nothing. And there is one more habit worth taking from Grover, because it costs nothing either. When he sells something, he writes it down. Date, what it was, what he got. A spiral notebook on the workbench, nothing fancier than that. It sounds almost too simple to matter. It is the single most useful thing in this entire video. Because a form is a claim about you, made by a company, from data it collected automatically. Your notebook is the only record in the world made by the person who was actually there. If those two ever disagree, the notebook is what turns your side of the story from a memory into evidence. And here's the part people find surprising. You do not need it to be perfect. A rough, honest, contemporaneous record beats a flawless reconstruction built 2 years later from memory. Every single time. Now let me pay off exactly what I promised you at the start. I told you that for one of these, almost anyone who gets hit can fix it completely with a single request. It is the wrong form. And the request is a corrected form from the issuer. Because when a payment platform reports money that was not business income, the fix is not a courtroom and it is not a lawyer. Verified card. Source. IRS guidance. Request a corrected Form 1099-K from the issuing platform. It is a request to the company that issued the paper, and they will very often issue a corrected one because they know how routinely the category gets tapped wrong. The relief is not hard to get. It is only hard to find out about. Almost nobody asks, for one reason and one reason only. Nobody tells them asking is allowed. That is the whole story of every rule in this video. And before we go further, I want to say something to the many of you who are sitting there now feeling a little sick about this. If you are on Social Security, you do not sell anything, and the only money moving through your accounts is your benefit and family helping each other out. None of this touches you. Not one part of it. You can breathe, genuinely. This video is for the ones who make something, who fix something, who sell a few things a year at a church sale or a flea market or out of a garage. There are millions of them, and they are some of the hardest working people in this country, and almost none of them think of themselves as running a business at all. That is exactly why this catches them. Not because they were doing something wrong, because they never thought the word applied to them. Now let me pull it all together because I want you to walk away with the picture, not just a pile of things to be afraid of. 1. The $600 rule is genuinely gone, permanently, and money from friends and family was never part of it. 2. But a missing form has never meant a missing tax. If you earned it, it counts. 3. Your state may draw its line far lower than the federal one, so a form can arrive even when you are nowhere near the federal number. 4. The sender picks the category, so a wrong tap can put money on a form that was never income, and ignoring that form is what turns a mistake into a notice. 5. Mixing everything in one account is what turns a 5-minute answer into a 5-week ordeal. 5 things, and every one of them has a door most people never knew was in the wall. Now here is your checklist. 5 things, this week. 1. Stop being afraid of the $600 rule. It is gone, and the fear is making people careless about the things that are still real. 2. If you sell anything at all, even occasionally, keep a simple record of what you actually earned. A notebook is enough. Nobody has ever regretted having the notebook. 3. Find out what your own state's reporting line is, because it may be nothing like the federal one, and that is where the surprise usually comes from. 4. If a form ever arrives showing money that was not income, do not set it on the counter. Contact the platform that issued it and ask for a corrected one, and do it while there is still time before you file. 5. If you sell anything more than once in a while, keep that money in an account of its own. It is a single visit to the bank, and it is the difference between a nod and a nightmare. And one more, because it may be the most valuable of all of them. If people send you money regularly for anything shared, church, family, a group gift, tell them once which option to choose when they send it. One sentence said one time prevents the entire problem in this video from ever starting. Now let me bring them all back, because these are not just names in a video. Thurman, who heard a rule was canceled and reasonably believed the tax was canceled with it. Ione, who arranged flowers for her church at her own expense and was told she had earned thousands of dollars. Melba, who knew exactly which money was which and still had to prove it for weeks. And Grover, who had the same form arrive and simply put it in a folder, because his money was already easy to read. 4 people, 4 ordinary lives. A garage, a church, a quilting frame, a workbench. None of them was running anything anyone would call a business. Every one of them would have told you sincerely that this subject had nothing to do with them. And that is precisely why it reached them. The trouble in this video does not go looking for people who think they might be affected. Those people check. It goes looking for the ones who are certain they are not. Not one of them cheated. Not one of them hid anything. They worked, they gave, they built things with their hands, and they followed every rule they knew about. The only thing they did not do was read the fine print nobody ever handed them, because nobody ever told them the fine print was where the money was hiding. Let me leave you with the one thing that ties all five together. The danger here was never the rule everybody was shouting about. The danger was the quiet in between, the relief. The moment when a frightening headline gets canceled and everybody stops paying attention, while the machinery underneath keeps running exactly as it always did. The people who get hurt are almost never the people who did something wrong. They are the people who assumed the story was over and never asked what was still true. That is the entire game. These systems count on you not paying attention, so paying attention today is how you win. Not paying more, not being sharper than anyone else in the room, just knowing which sentence is still true after the headline stops shouting. That is the whole difference between the people who keep what is theirs and the people who spend a year explaining themselves. It was never about who was honest. Every person in this video was honest. It was only ever about who knew in time. I am Kevin. Thanks for watching. Do not forget to check the quiet rules at kevinexplains.shop.